thank you very much for joining us. What a terrific turnout to have had almost 3,000 registrations for today's webinar. Is a new record for us, I'm pretty sure, so we are very excited to be here. Today, we're going to be discussing the hot topics that accounting professionals need to know this end of financial year. This is what we're going to be discussing today. We'll start by talking about client engagements and make you aware of what your obligations are and why they're so critical now. We'll do a little bit of crystal balling and we'll talk about the future of client engagements and the role that we think technology will be playing. We'll talk to you about verification guidelines to ensure that KYC and AML compliance is well versed. Director identification, a new requirement, and what your obligations are. Single Touch Payroll Phase 2 and how the updated guidelines could affect your clients. And then we'll have a fairly lengthy session on ATO compliance activity and what you can expect in 2022.
It's effectively a contract between us and our clients. There should be an engagement at the beginning of a relationship and also something that you continue to review and implement as an ongoing process to update all of your services, your terms. It's supposed to clearly talk about the relationship between you and your clients and what's going to be provided in your services, who's going to do what, because sometimes there are responsibilities on your client to supply certain information to you to do things in time. How this will be done, when all the work is going to be done. Is it reoccurring on a monthly basis? Are you doing quarterly BASs or are you only doing annual work? And ideally, how much it will cost, or if you haven't moved to fixed fees, what is the way that you will be charging for this? What are your hourly rates? What are your payment terms? It's really all that foundation stuff that, if not dealt with properly in an engagement letter, can actually cause client disputes down the track. And that's why it's so important that we understand why we should be engaging our clients all the time. For me, it was a bit of a daunting experience going from just sending out a Word document at the beginning of a relationship to reviewing this process every year. Now, this, I think, is where our industry not only needs to go because it's a requirement, but has to go for the sake of their businesses. But we need to make it a streamlined process. And this is where technology comes into play. And particularly using something like Ignition means you can have all of your engagements templated. You can bring your team in on the journey and have them as part of that engagement process. So it's not just one person's problem or not just the partner's problem. You can use it if you use engagements to drive your invoicing as well, you're not actually doing any heavy lifting around that part of the process, which means it should, if you use technology correctly, it shouldn't take any more time. The future of engagements is a whole change of mindset around accountants, the way they engage and how they adopt technology in their firms.
The number of ATO reported scams has doubled between 2020 and 2021. Since the start of COVID and more people working from home, it's becoming harder and harder to be able to work out whether the person that you are dealing with is the person you think you're dealing with. And agents are in a trusted position and have access to a lot of client data, which is very valuable to scammers. So what we want to do is make sure that we've got the best processes we can have up the front so that when agents are engaging with clients, that very first engagement, you actually verify that they are who they say they are. So there is some quite detailed guidance available from the ATO and from the TPB. So the MBR is about establishing that new modern business registry services, and services are being rolled out between now and 2024. The idea is that we'll actually be bringing together the ABR and around 30 existing ASIC registers. So you wouldn't think there was that many, but there are. There's a lot of places where we're currently storing all of this information, and we're going to bring it together into a single source of truth. So as I said, Director ID is the first service. And I guess there are two key advantages for business. One is that there's going to be a single source of truth. So if you are looking for details about another entity that you want to engage with, you'll be able to go there and get that information and be confident that it's actually good information. But it'll also, importantly, be more easier and streamlined for businesses to be able to meet their registration obligations. And that might be registering for the first time or maintaining the details on the register. Phase 2 is here, and under phase 2, look, the fundamentals are not really changing. The type of payments that are in scope, the due dates for reporting, your finalisation, all of that's still there. But there are going to be some new things to actually report on. And that's things like income types, country codes, salary sacrifice reporting. There'll be some new and improved STP reporting fields as well. Now, that information, as I said, is shared with Services Australia where it's appropriate to do so. So that means that employers won't have to provide separation certificates, and it'll also streamline employers' reporting in terms of child support. So that's all good. We'll also be addressing some of the key irritants from STP phase 1. And they were things like if people needed to change software, they had to go and do a heap of work. So in this case, it should take care of things like that. Now, one of the biggest changes you are actually going to see is that we're now disaggregating gross income amounts. Now, under phase 1, most things were combined into a gross, except for there were some things that were separately itemised. And while that works really well for the tax return, it doesn't necessarily align with the super and welfare systems. So for that reason, some of the things that are currently or in phase 1 were in gross are now going to be split out. So we still need to report the total amount paid to the employee, but instead of that single gross figure, things will be reported on separately. And you can see in the slide there, David, some of those things that are actually now all split out. So the allowances, the salary sacrifice, the director's fees, leave, overtime, bonuses and commissions, all going to be reported separately because they are used differently in the welfare and super systems. Now, a lot of business software already captures this breakdown, so hopefully it shouldn't be a too big of an impost for most employers, but it is reliant on the software in most cases. And so we know that the software providers are just making sure that they've got everything covered.
This sounds onerous, but if you do use good technology where you can template out your engagements and your services, it takes a minute. And you can do bulk engagements as well, where you can create a draft set or have someone in your team potentially as well create all the engagements that you need for your clients to do this extra work. It can be maybe just for one service, so a short period of engagement, not a whole entire process of re-engagement. And then you just need a partner or one of the managers to quickly go through and send it out. It doesn't take long, and using something like Ignition, and it's not a total product push, but it is a little bit because the product works. It's fantastic. So using something like Ignition where you can template this out and duplicate it across multiple clients means that you can be engaged, covered and paid for this work with a very, very light involvement from really anybody in your team. Just copy and paste and on your way, but also be able to make sure that it's easily accessible by everybody so you can manage your scope creep on an ongoing basis.
The first one is work-related expenses. Now, not surprisingly, it's a key focus area for us because it is one of the big areas where we do see a lot of errors in returns. And within that, the working from home is obviously still reasonably new to a lot of people. So there are still quite a lot of mistakes being made. So that is a priority for us. Now, you might have seen the recent guidance on the COVID test kits. That's relevant both for income tax returns and it also has FBT implications. So that's an important one to get across if you're not already across it. Now, rental income and deductions is another focus area for us. There's about 2 million people who've got rental properties, and between them, they claim a lot of money in expenditure, and there's also a lot of income associated with it. So that makes it a feature of our program most years. Cryptocurrency and capital gains tax is another hot topic. There's about 500,000 people who are buying, selling and exchanging in 2021. So that's quite a sizable increase from previous years. what we're seeing is that clients are not necessarily telling their agents about their crypto activities, and that's making it pretty hard for agents. For some clients, they think that it's a personal use asset, and even though they are probably actively trading and more likely in a business, so they think there's no need to tell their agent. And for others, they might not be in business, but they don't realise that it's important to tell their agent because there might be capital gains tax implications. So what we would encourage practitioners to do is just to ask that question: have you had any cryptocurrency activity during the year? And from there, you can work on. And the other thing I thought I might just touch on, David, is that even though tax time, we tend to think of it as income tax, actually during tax time, there's a lot of other activity that happens. And so activity statements are being produced and lodged, and there's lots of other reporting obligations that are happening as well. And I thought I just might touch on some activity statement irregularities. So we do see at tax time and other times during the year errors in activity statements, and that could be because the client's made an error, or it could be that there's something that the agent could have checked and didn't. So we're just encouraging agents to make sure that you are actually checking with your clients in terms of the claims that they're making.
I hope you found this afternoon session, depending on where you're at, to be informative. I would like to say a very special thank you to the ATO and to Kath Anderson in particular for joining us today. Thanks so much, Kath.
Thanks, David. And
of course, Rebecca Mihalic, who features in almost all of our webinars and is a real webinar pro these days. Thanks for your wisdom, Beck. It's been great to have you with us.
Thank you, Dave.
Thank you very much for joining us. We look forward to you joining us again sometime. Thanks again, Kath and Beck.
Thanks, everybody.
Cheers.